You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome back, everyone. Today we're jumping into some really interesting sources you sent over, looking at this intersection of traditional finance and, well, digital assets. Some surprising shifts happening and some practical stuff, too.
Yeah, it's definitely moved past just talk, hasn't it? I think what's really crucial to understand is how things like Ethereum, like stablecoins, they're not just for trading anymore. They're actually reshaping the basic plumbing of global finance. So our goal today is to break down what's really important there and, why it matters for you.
Okay, yeah, let's get into that. First up, Ethereum. Your sources are pretty clear. Wall Street seems to be embracing it. Big names, right? BlackRock, Deutsche Bank, Coinbase, Kraken, even Robinhood. They're building tokenization trading systems right on Ethereum and these layer 2 things. But why Ethereum specifically? What's the big draw for these huge firms?
That's a great question. And honestly, the speed and just how widespread this is becoming is, well, it's fascinating. You mentioned Robinhood, a public U.S. company, right? They're already doing tokenized stocks using Arbitrum, which just quickly is like an efficiency layer on Ethereum, makes things faster, cheaper. Then you've got Deutsche Bank talking about a platform based on zkSync that's using some pretty advanced tech for privacy and scale. And Coinbase, Kraken, they're moving ahead with offering actual equities on the blockchain. So this isn't just a plan. It's happening right now.
Wow. Okay. And you can see the ripples, can't you? ETH was up nearly 6% this week. We're seeing firms like BitMine, BitDigital putting actual treasury reserves into Ether, plus those Ether ETFs, back-to-back inflows. And it all seems tied to stablecoins settling mostly on Ethereum. So is it just speed and cost, or is there something more fundamental, like trust?
I think trust is a huge part of it, absolutely. If you look at the big picture, Ethereum's been running for, a decade now? Pretty much without major downtime. That reliability, its security record, and the fact that it's neutral ground not owned by any single bank, right? Those are the core selling points for institutions. They want something programmable, reliable, something proven. It means we're likely to see more financial products you use every day built on this.
That's a really significant shift. Okay, so staying with infrastructure, let's talk stablecoins. Your sources highlight how they're sort of quietly becoming a new backbone for global payments.
Oh, definitely. That Hypothetical Genius Act you mentioned, just having clearer rules, even if theoretical here, it really seems to have spurred things on. We're seeing the big payment players Stripe, PayPal, even Walmart building on compliant systems. And Fireblocks had that stat. 86% of firms they surveyed already have stablecoin systems. That's huge. So they're being used for everything. Payments, sure, but also on-chain foreign exchange, yield generation. I mean, the fact that over 99% of on-chain currency exchange is in US dollar stablecoins, that shows you how mature these rails are getting.
Right, but then there's this twist, isn't there? While Ethereum and stablecoins are booming, Bitcoin seems, well, a bit sluggish. Activity's down, hitting like a 20-month low in volatility, monthly transactions dropping off. What's the story there?
Yeah, it's a really interesting contrast because despite that slowdown, June saw transactions dip about 15% month over month, right? Demand from those U.S. spot Bitcoin ETFs has just exploded. You've got cumulative net inflows pushing towards $50 billion, holdings over $137 billion, and public companies snapped up another 65,000 Bitcoin in June alone. So what does that tell us? It really looks like a clear shift. Institutions are piling in, maybe while retail interest has cooled off a bit. It raises big questions about Bitcoin's future, its role. Does it change how you should think about it?
That institutional shift definitely makes you think about control and governance, too. How do these new systems manage themselves? Your sources had an interesting example with Lido DAO.
Right. Lido's new setup is a great case study in evolving decentralized governance. Basically, they've given stETH holders, people holding that liquid token representing staked Ether, actual veto power. If holders with just 1% of the total staked amount object to a proposal, they can pause it for 5 days. And if dissent hits 10%, the whole thing goes into what they call rage quit mode. Sounds dramatic, but it essentially lets people exit with their funds if they strongly disagree, and it freezes new proposals until things get sorted out. It's a pretty clever way to build checks and balances directly into the system, protecting the stakers.
That is clever, an on-chain safeguard. And speaking of safeguards, thinking about protecting yourself, your sources brought up a really timeless trading idea, bet sizing. How does that fit in?
Yes. It's fundamental, really. The core idea is simple. How do you make the most of it when you're right? But crucially, lose as little as possible when you're wrong. It sounds obvious, but mastering it is probably one of the most powerful skills in trading, or any kind of investing, frankly. Think about that famous Stanley Druckenmiller trade in '92. Soros apparently urged him to bet the farm well, double the fund's entire position against the British pound. That wasn't just gambling, it was extreme conviction in what they saw as an asymmetric bet. Huge potential upside, limited downside. It comes down to discipline, doesn't it? Having clear reasons to get in, deciding how much to commit, managing risk constantly, knowing exactly when your idea is wrong, and having strict rules to cut your losses. That discipline applies whether you're managing billions or, your own savings. It's about making calculated decisions.
So from Wall Street getting comfortable with Ethereum, stablecoins changing how money moves globally, to these new governance models and timeless risk lessons.
Yeah.
It really hammers home how fast this financial world is changing around us.
It really does. And this whole convergence, this integration of traditional finance with these programmable digital assets, it leads to a pretty profound question for all of us, I think. How is this massive shift going to change what we even consider a safe bet? Or what financial opportunity looks like? And maybe most importantly, what's your place going to be in this new landscape unfolding over the next few years?
Spoken Tech for your ears.